As it happens, the economy is doing fairly well more than a year after the last hike. Therefore, the risk of a recession has expired. It may surprise you to learn that I have been a market watcher for about 30 years, if not more. I've also covered and lived through a lot of recessions. Rarely do recessions occur when all markets predict one is on the horizon. The people at the market are not very intelligent. Since we frequently deal with clients and institutional investors that consider a recession to be their worst-case scenario, the fact that so many people believe that a recession is near, and we see it, just means that everyone is suddenly an excellent economic forecaster. Furthermore, no one is able to predict the economy, as you are aware. The only reason we believe a recession is less likely is because everyone believes one is likely. We don't attempt to predict the economy. Logically, however, some things are deteriorating. I suppose I will not attempt to ignore it. We are aware that the job market is becoming more lenient and that customers are running out of extra funds. We also know that the housing market has become quite challenging since it is unaffordable. Additionally, there are regions of the nation where inventory has significantly increased. Spending on durable goods, such as vehicles and appliances, is completely collapsing. I mean, there is a correction in inventories, and used car prices are likely to drop significantly. I mean, a lot of surplus inventory of commodities has been destocked. The slowness is being caused by those. Oh well, that means this is going to lead to a recession. It's the mistake I believe everyone will make. First of all, inventory, durable goods, and housing are all very rate sensitive. Therefore, all of those turn around the moment the Fed begins to cut. Second, the corporate bond spreads, quality spreads, credit markets, and bond market, all of which you would expect to blow out in the event of a recession, are completely mid-cycle. Examine the stock market as well. I mean, if someone is shouting at the market and stating that they believe a recession is coming, they are being bearish. Nobody I know has ever made money doing it, really. It's noteworthy to note that that represents a compound annual rate of almost 15%. Oh, I see. And it, I'm sorry, earns about 15%, plus another 5% from multiple expansion. And I would suggest that we simply perform an interval in reverse. When I worked at JP Morgan in 2008, S&P earnings for the previous year were predicted to be $60. The high watermark for earnings prior to the Great Financial Crisis was $60. Additionally, some predicted that it would take 10 years for the S&P to reach $60 again. Since the larger-scale miners can be really inventive, as you are pointing out, that is actually beneficial. In addition, I believe that mining is really quite significant. I mean, Bitcoin depends on mining. After all, without mining, Bitcoin would not exist. The miners, on the other hand, have been more difficult to deal with than stocks, in my opinion, because they are basically Bitcoin's beta. Let's check the Nvidia stock this morning. With a price target of $175, Piper Sandler rated the stock as overweight and declared it a must-own for the ramp-up of its Blackwell chip. The company was deemed a top large-cap choice. It costs $148.07 now. You brought up a few hyperscalers, I believe. Nvidia had a few good things to say, guys. In addition to Piper making it a top choice, this Melius note is also quite intriguing. According to Ben, it comes to $185. He continues, "We're even more excited about Blackwell than we were before." According to Ben, abandoning Nvidia with Hopper is comparable to abandoning Apple following the release of the iPhone 1 or 2. Additionally, they have updated projections on hyperscaler capital expenditures. Their figure is $282 billion. How long is $282 billion spread out over? When Oracle, Amazon, and Meta are taken into account, it would be up 24% year over year. How it stacks up against some of the Morgan Stanley figures we received is unknown to me. That was more than $100 billion. Yes, I am aware that they were worth $300 billion. Yes, exactly. I must verify the figures. However, there has been something intriguing that I've been attempting to concentrate on. Last week, there was a *information* story. Additionally, I listened to Mark Andreessen and Ben Horowitz's podcast. It has nothing to do with that, even though it was done before the election. They discussed, or at least brought up, The idea that the development of huge language models, especially at OpenAI, is, in a sense, stalling out as they move from one model to the next. Additionally, Orion, the next flagship model, I suppose its code name there, is Nvidia GPT-4, which were, of course, the final two models. On that podcast, Andreessen also made the same statement. It's kind of fascinating, so I'm simply marking it. Is their data running low? Why? Is it accurate? Is progress actually slowing down? As that wasn't anticipated. It's not like it's a chip problem if they're actually using as many or more CPUs. It might just be unclear. Certainly unclear to me, Carl, or it might be a data-related problem. But if the trend abruptly halted, that would have significant consequences. Not to deviate too much from your point, but I am aware of the other. Andreessen called America an economic coiled spring in a recent tweet. According to him, our GDP should be expanding by at least 4%, and ideally by 6% to 8% or more. He claims that since before I was born, growth has been ruthlessly restricted. It would be intriguing. Then we return to this. We had these conversations about the need for people throughout the first Trump administration, and without people, how are you going to achieve that type of growth? Perhaps it will involve generative AI and robots. Once more, but perhaps the point is reached if it stops moving forward, Sarah. I'll listen to Mark Andreessen and a lot of other experts on this, including Jensen, I promise. I don't know. However, I found it intriguing that Andreessen essentially stated the same on the podcast as well, naming ChatGPT employees as the sources. Isn't that because we all believe it's on a one-way ticket that's higher and faster? That's right. The rate of change will only increase exponentially, by the way. Well, maybe bears prevailed. It's fascinating. The new president's rhetoric regarding Taiwan will enrage the Chinese because they will have to pay for their own defense, which means Taiwan will likely end up purchasing F-35s and Patriot missiles from the U.S. to demonstrate that they are willing to cooperate. This has been an existential threat to Taiwan Semi and possibly Nvidia the entire time, so you start to think about how it will all work out. How about semis? Well, Nvidia was mentioned. You see, it's putting Apple at the top of the market capitalization ladder. Of course, it has had a fantastic run, but not all of the stocks in this market are Nvidia. How do you evaluate the semifinals? This is the one instance when I firmly believe you have witnessed leadership truly fracturing or splitting. And this has been the case throughout the spring, summer, and fall. We are aware of the Nvidia chart's excellence. We are aware of Broadcom's excellence. AM8 is where? Lam Research is where? Where is ASML? You know, where is Samsung in terms of perceived leadership? It's the fastest in my opinion. Under the surface, it is the weakest. Here, only a quarter of the semis are above their 200-day moving average. In the upcoming 4 to 6 weeks, semis do provide some decent seasonality. If you had a bounce, I believe I would be more likely to fade it in the semifinals than to chase it. I questioned you about Berkshire selling Apple earlier, so now I'll ask you about Nvidia, its participation in the Dow, and your thoughts on it in light of your observations over the years. Indeed, it is evident that on some level, the Dow felt somewhat out of step with the current state of the economy due to the prior inclusion of Intel and the lack of a play on Nvidia, which accounts for 7% of the S&P 500. One could argue that it is simply clinging to a high momentum play after its biggest gains have already occurred. As you can see, Nvidia and Apple are currently neck and neck in terms of market capitalization. Given that Nvidia will account for almost 1/3 of the revenue in the upcoming year and roughly half of the net income, it is clear that its stock is more costly, but it is increasing.